Hello, everybody, and welcome to the IMAX Credit Repair podcast. And today we have a special guest making another appearance with us, Rod Viana, who's a good friend of mine and a very, very seasoned mortgage broker as well, too. And we're going to discuss how do you go ahead and find the right mortgage person or the lender or the right bank? How do you get the best rates? And, in the mortgage industry, people really get scammed and get taken for rides as such. And we want to make sure, we want to put information out there that if you're in the market for a mortgage, how do you pick the right broker? How do you get the best deal and you make the right decisions as such? So without further ado, we'll have Rod who takes us on. And what we want to start with, Rod, is like, have you seen people get taken advantage of in the mortgage industry, right? You've been doing this for like 20 odd years, and you're like one of the most empathic, compassionate people that I know that puts people in front of money. Like I've seen you, tell people that, hey, I'm not the best option for you right now, and that's kind of like how we do business as well too, right? If we, sometimes credit repair is not what they need or another company may be a good fit for them. And I think like value-wise, we, connect on that sense. So, if you want to talk about like, what have you seen that's been, that pisses you off the most, and that's been the most heartbreaking thing in the industry when, you see people get loans and not be treated right?
Man, I think the biggest top of the list complaint is just misinformation. Misinformation leads to more misinformation, and then it puts, it kind of gives the mortgage guy, the mortgage girl, a bad look. There's a lot of bad players out there. I think anytime you put commissions as the driver, that's when, the purpose gets lost. People are selling based on comp, where, we're really handling here one of the most important, maybe the largest financial decisions anybody's ever going to make. So you got to act accordingly. There's a big responsibility that comes with that. So I oftentimes see a lot of misinformation coming across my desk. It's just not right. It's not clear, So that's number one for me.
Gotcha. And tell me, like, tangibly, right? Like, if they don't end up with this misinformation, what could it cost people, right? Like, if they go to the wrong person and what have you, like, what are the ways that they get taken advantage of? Like, they don't get approved for the loan, or they end up paying a higher rate, or they end up losing the deal, deposit. What happens?
I mean, it could be a number of things. It could be, they're paying a higher rate, or the loan wasn't structured correctly, and maybe there was a better alternative for the client.
They got the wrong type of loan.
Rate.
Yeah.
It could be something related to credit. They maybe got a little lazy, didn't want to do maybe a rescore or a review of a potential rescore that could have gotten the client to maybe higher grounds on a rate. It's a number of things, and the real estate market has been really difficult for buyers. It's tough to get in. It's a very competitive market. So the right broker should be able to get that buyer in the best possible position, ready to pull the trigger, and know that the process is going to go through. So that's kind of where I see the biggest issues nowadays, especially if you get in with, somebody who maybe is not, doesn't have the best intentions, or, has only been in business for a few years, because our business has gone through a lot of cycles.
Yeah.
And a lot of scars on us. We've had 2008, we have now 2021, 22, 23. 2003. So there's been a lot of changes. And if I was on the opposite side of the table, one thing I want to look at is how long has this person been doing what they're doing.
So when you're looking for a mortgage broker, you're going to be looking at, let's just say if I'm a client and I'm looking for a good mortgage broker, I want to basically figure out like how long they've been in business for.
Correct. Is he a rookie? Is she a rookie? Are they seasoned? Have they been a broker their whole life? Did they have some retail experience? Mm-hmm. Most people, when they're shopping for a real estate agent or a broker, it's really just on referral, and that's cool. That's okay. That works. But I think looking at the resume sometimes will probably give you a little bit more information.
Gotcha. Anything else that they could check? Somebody could be in the business for a long time as well too, and not have the best interest for the clients, right? Like,
Sure.
is there anything that they could do to, go ahead and protect against that, or check up the person's reputation, or anything,
I mean, a referral works, like I think if, in our relationship, right, we're in a trust business, so having a referral from a reputable credit repair company, that comes with a lot of support. And then for us, I'm speaking about us individually. If you look at my NMLS, I've been doing this for like 23 years now. I've gone through 3 different retail banks for 17 years of my career. We just turned 5 years with Mortgage Globe, February 2024. I've seen a lot of things. And I think what's been most successful for me, which is something I like to look for in other people, is that even though I have 20 some odd years of experience, how humble am I? Am I willing to learn anymore? Because the business is changing every day, right?
Gotcha.
And can you adjust yourself to, and be patient with a new buyer, a new client that has never done this before, versus somebody who's may come with a little bit of entitlement because they've done 5 deals in their life and they think they know everything about a mortgage, so you kind of have to adapt and adjust. And I feel that information is key. I personally am looking for menu. I say this all the time, even in my personal life. Like, give me a menu of choices. Am I making the right decision? Is putting 30% down the best option for me? What would 15 look like? Let's strategize here. Let's try to figure this thing out and look at every possible angle. Where I've worked with a lot of mortgage guys that are just like, okay, well, you're gonna put 30% down. Sounds good. Well, here's your rate. Here's your application. Let's go. Let's dive a little bit deeper. Build that trust with the client. Have the client think a little bit more about what else could be available for them.
Gotcha. So what I'm hearing you say is that, you need to be, client needs to be able to be in conversation with the mortgage broker and kind of like be part of the process itself, right? And be well informed instead of like having everything, instead of abdicating,
Correct.
So yeah, I like the fact that you bring everybody in, you give them their options, and the fact that, that this is a big financial decision. You give them all the options that are there on the table and then make suggestions instead of saying, well, I'm not going to give you any of the options and, let me just figure this out for you. And what have you, right? And I think what that does is it really informs people about the different type of loans and products that are out there and gives them more ownership of the process as well. And, as far as, I think we spoke about compassion and honesty and so forth, right? And we should talk about 2008, 2010, right? I was in the credit repair industry at that time, and I used to work right next door to my uncle's mortgage company, right? And, partly help running that company as well too. And I remember I was seeing so much from in the mortgage industry at that time that like I was raising my own eyebrows to, right? Like you had these negative amortization loans, right? Which, I remember like I never pushed anybody to get one of those adjustable rate negative amortization loans. It was like just kind of like beyond me. Like, why would people get these? But they were, people were making, most of these loan officers were making a lot of money, and they were directing people towards the loans that they would make money off of.
Sure.
Of, right. So kind of like what we were talking about too is that, the hidden motivations of a lot of these banks and these lenders would be is to, to push people towards loans which are not good for them. And keep in mind, like the negative amortization loans may be good for a certain person in a very specific situation, but not for everybody.
Sure.
So having said that, right, you find, a good mortgage broker or lender, right? Like what kind of service could one expect from them, right? You spoke about like the person giving them options and so forth on the table and bringing them into the buying process as such, right? What else do you think, would be an indication that, a client who already maybe with a mortgage broker is in the right hands?
Right. I mean, I think, somebody that listens, somebody maybe even challenge the client a little bit, let me know what you're thinking. What do you have in mind? I feel like trying to really make the process relatable. What I personally do with all of my clients is I'm saying, I like to hear, hey, what do you like to do? What's in your mind? What are you envisioning here? And I'm like, and if you don't mind, I'm going to challenge you and give you my opinion about how I would personally do it if it was my loan. When we set up our company, for example, most of our contracts with our lenders are about the same type of comp. And why do we do that? Which is kind of rare for mortgage brokers. The way I did that here is because we don't want us selling anything to anybody because of comp. We want to do it because it's right for the client, right? So I would look for somebody who is really looking for, try to understand, that's spending the time, that's providing information, that's patient. There's a lot of burnouts. It's a tough business. It's a no common sense business. So you find, some of the loan officers don't have a lot of patience. They just don't have a lot of patience anymore.
Gotcha, man. What are the, let's just say if I'm a client as such, trying to, it's my first time getting a mortgage, right? Find a mortgage guy, he listens to me and so forth, and he's got me in, the process. He has buy-in from me. He or she has buy-in from me. What would I ask the mortgage lender? What should be, the prime points of consideration and the questions that I need to ask about the loan or the process? What are the things that I really need to know?
I mean, you need to know your rate, make sure that the loan structure, go through the loan structure first, because the rate.
What does that mean? The loan structure.
Payment, FICO score, how we're going to document the file. Is this going to be an owner-occupied property, investment property? Sure. Go through the structure, go through the scenario, understand if there's a different way of putting a deal together. If we do it another way, would the rate be higher or lower? Because, Ali, the best rate sometimes is not the best rate for you. And I'll explain that later for you. Yeah. But go through and try to really strategize as much as possible. Look for somebody who does have some dynamic thinking, somebody who's maybe can think outside the box a little bit. And then, so structure the deal, go through pricing, and try to understand, what the costs of the loan is going to be, and know what is broker lender related charges and what is not, and understand the difference. Because on a purchase, on any type of loan, you have escrow, you got title, you got appraisal, transfer taxes on a sale of a home, you have insurance. There's a lot of things that may come as a surprise to someone. I'll give an example. I have a brand new buyer right now. He's buying the home that he rents. And, he's like, well, I have 20% to put down. And in his mind, that's all he had. He hadn't budgeted for closing costs, which was going to be an extra 2%, not 2 points, but insurance, taxes, escrow, title, appraisal, credit report fees. So he had to budget for a little bit more. So understand what the structure is, how to put the deal together, and what the costs associated with your loan.
Understood. Gotcha. Thank you for that. Like what I'm hearing you say is that, yeah, check what the rates are. How's the loan structured itself? Is it an interest-only loan? Is it a fixed rate loan? What's this and what's the thinking behind it? And then also compared to the other loans that are available as such, because there's so many different types of loan products out there, right? And based on a person's income, their situation, their needs, how long they're going to keep the house for, amongst other things, right? Like those are the things that one needs to factor in. And I mean, like the reason why we're bringing this up is that, I think like 0.25% interest rate, 0.25% interest rate on a $500,000 loan is $20,000 or something to that extent, right? So even the most minor differences in the loan make a huge difference, given that this is the biggest financial decision that anybody makes in their life, right? And often it's one of those things that people just overlook and just abdicate and just not, pay attention to see that, hey, there's many ways that you could go about getting the right type of loan based on the right type of situation. as such.
Right.
Like, if I'm going to keep a house for only 3 years and I'm sure I'm going to keep it for 3 years, I may want to get a different type of loan as opposed to if I'm going to keep the house for 30 years and stay in the house for 30 years, right?
Right.
Or
Well, actually, I sent you some information, which is actually pretty interesting. And it's a tough thing for people to understand off the gate, right? Because everybody wants the best deal. Everybody wants to get the absolute lowest cost possible. So what I did for you guys here is a comparison of a deal with no points, a deal with 1 point, and something that I bet you most people haven't heard of, which
and
is
Rod,
like,
explain to some of the people what a point is.
a point is a charge that you pay to the lender to lower the rate premium. Okay, so, and this is just a very static example for a scenario I ran today for you guys. So you can go into a deal today on a 680 FICO score, 800,000 purchase price, 20% down. This is assuming owner occupied. I'm not going to get into all of that, but just for the sake of this example, a 30-year fix today is a 7.125 with no premiums paid to the lender. Okay, there's no premium to bring that rate down. It's a no cost for that rate.
Got it. So basically, a point would be like a bank fee in a way. Right.
Yeah, it's a premium paid to the lender to drop the rate down, right? Because there's margins on those rates, there's hedging, there's secondary
got it.
that happens.
So what I'm hearing you say here is that if I get a loan from XYZ lender, they may give me a 7% rate, but if I'm able to cut them a check or give them a $8,000 check, they'll give me a rate that is 6.75 instead of 7.125. And then we could see, does paying the extra money to the bank really serve me in the long run or not, right? So this is just one of the ways that you could get creative and find the best deal.
And this is where I think a pro loan officer should come in, because what I like to highlight here is example number 3, because the opposite is also true, right? Does it make sense for me to take a slight higher rate? And the opposite is true, where if you get a higher rate, that if you agree to pay the bank a higher interest rate, any yield spread premium that was made on that rate will be given back to you in form of a credit. If you're buying a house in a downtrending rate environment like we are right now, and you believe that rates will be coming down within a certain period of time, let's say for sake of our example, 6 to 18 months. Okay. Sure. Does it make sense for me to pay points? Absolutely not. So that's off the table. Does it make sense for us to consider a loan where I'm going to pay a little higher rate, but I'm going to have some credits from the bank to pay for my escrow, my title, my appraisal? Let's see. In my example here, if you took the higher rate and the bank gave you a check for 1%, which is $6,000, you would take 29 months before you begin to lose money.
So the credit is like, you could, if you don't have enough down payment to pay for your escrow, right? You could basically tell the bank to advance you $8,000 here.
Oh, $6,000. It's a percentage of the loan amount.
Got it. $6,000 here, and here you're giving the bank $6,000.
Right. In this case, the bank is giving you a credit for that amount.
Okay. Beautiful. Okay.
So in that example, it becomes like, well, do we think rates are going to go down? Yes or no? How long am I going to stay in this house? So you have to factor these things in. And Ali, I say this all the time, ma'am. The lowest rate may not be the best rate for you. And here's an example. If it was me, I would go with option number 3, because I personally believe that I will be refinancing my loan within 18 months at the very latest.
Okay.
Right?
So you don't care about the payment being high?
No, because look, it's $6,000 less out of my pocket. I'm gonna break even before the bank does.
Got it.
You understand? So I want to make something very clear. This is where I think the trust comes in. I'm speaking for myself and for Mortgage Globe. We do not make $1 extra from this. Mm-hmm. We don't. Our commissions here would be identical on each of those 3 examples. But where the dynamic thinking, the true financial assessment comes in is by providing the client the 3 examples and have them choose. Mm-hmm. Make sense?
Understood. Yeah, that's really helpful. And yeah, man, like this is good. Like my background has been somewhat in the mortgage industry as well too, but I didn't know of the credits. I did know about the rate buy downs back in the day. I didn't see this happen. So thank you for bringing that up, and that's a very, very interesting scenario that you brought up. And what it really underscores, like you said, right? Sometimes, you could go with option number 3 if you're not going to keep the house for a long time. Get a credit from a bank, refi if you're going to be refining in, a certain number of months and so forth, right?
Yeah.
So
especially so too, Ali, if you have investors that are buying homes to maybe renovate and sell within a year, that is the lowest rate. I can guarantee you it's not going to serve you.
Gotcha. Whereas, most lenders are going to be like, hey, let's just go with 0 points. I don't need to explain any of this stuff to clients and so forth. It is what it is. Let's just go.
The eye is trained to look at the cheapest. So you're looking at everybody's lasering into the rate, and that's completely fine. And that's the way I think the business conversation should begin. But you have to expand the vision and say, listen, let's back up a little bit and look at this deal from a different side. Got it.
So, Rod, just a couple of things here, right? How does someone get the best deal on a mortgage? I think that's what we're going over, right? For them to know their options, for them to know there's something known as a rate buy down. There's something known as a credit as well, too. And then, what are your thoughts on like comparing mortgage brokers and so forth, right? Somebody out there may already have a broker, or they may be with you. Like, do you encourage people to shop as such, right? What do you think? Like, if you're in the market, what would you do? Would you take a couple of mortgage brokers, 1, 2?
Yeah, I mean, listen, I'm a little biased, obviously, but I would say, price compare, and if you find, let's say you go to broker 1, 2, and 3, right? You really like broker number 1. He seems seasoned. He or she gives you all the time that you needed. He was attentive. He really felt best. But broker number 3 was the cheapest. It was marginally cheaper. Then go back to broker number 1 and say, listen, I really enjoy working with you. Is this something you can match? Is this something we can work out? Because sometimes it'd be a matter of like, okay, well, maybe I'll just lower our commission a little bit, to make this deal work. And I've done this a number of times, for my clients, because I also, there's a lot of people I enjoy working with, and I don't care if we make a little bit less, because Ali, for the real estate game, it's a marathon. It's not a sprint. The guys are at the top of this game. They should be looking to not make a home run on every single deal, and have as many touches as you can, help as many people as you can. The earth is round, things come around. I would rather do 10 deals for less than doing 5 deals for more, because 10 deals done right with the right intentions will turn into 20, and then 40, and then 60. Then now your phone is ringing all the time, where the home run mentality, that person may be at a dinner table one day and say, man, I feel like I got overcharged. You're going to talk to somebody else and say, man, that sounds expensive. Then I'm going to call you again. So it's not the way to do business, in my opinion.
Gotcha. Yeah, that makes sense, man. Well, on that note, thank you for being here, brother.
Thanks,
and,
man.
It's been just an honor to have you here, and, to get this information out there. I think there are very, very few mortgage brokers that, lead from compassion and empathy, and put service and mission in front of financial gains. And, I found you to be one of the few people that do. And that's one of the reasons why you've been able to help out so many of our clients that have come to us. And we've been working in partnerships for a long time, you telling us what do they need from a credit perspective and so forth, and getting them ready to get approved for those mortgages. So, this information is really, really invaluable. So to everybody out there, I hope this information, was valuable to open your eyes up and so forth. And if you're along the home buying journey as such, hopefully you end up with the right person, make the right decisions as such. And again, if you're looking to buy a house and if you haven't started, reach out to us, reach out to me. We could see where the credit is, what needs to happen. Me and Rod could work as a team and get things forward, and what have you. Or even if, you already have, secured a mortgage deal and so forth, always good to get a second opinion, right? Second set of eyes, just like Rod said. So on that note, bid you all farewell. Hope you happy home hunting and happy mortgage shopping.